Turning back to today's big news, the coronavirus. Chinese stocks are getting swept up in the global sell-off, clearly. But overall, large-cap China tech and healthcare names have actually held up better than you might have expected. Investors had been putting money back to work in emerging markets in recent weeks, according to analytical firm Lipper. Brendan Ahern joins us, and he's the CEO of KraneShares, which runs KWeb, which is widely viewed as the benchmark for Chinese internet stocks. That is an ETF as well. So, Brendan, I was looking at it. KWeb is kind of mixed, although I would have thought that people would have been much more excited about web use in China, given the fact that everybody's been sitting at home with nothing to do.
I couldn't agree more, Bertha. You have this risk off where if you're quarantined at home in China, what are you doing? You're online gaming,
Correct.
Online education, downloading content.
Yet NetEase has not been doing that well. IQIYI was doing pretty well. That's the Netflix of
Yes.
China.
It's very true that I think investors are doing a knee-jerk reaction, and they're just basically throwing away these great names that arguably are actually benefiting from this. I think what you're starting to see is in mainland China, equity markets are stabilizing. So I think that'll slowly come, and we'll see these names which are on sale being bought.
And one of the things I found very interesting is that Cure, that is the healthcare in China, is actually the best performer, up 10% this month. Names like Ping An that people may have heard of, they do the technology based and also offer other services. They are one of the big winners. And today the biggest winner is a supplier. I'm not sure how you pronounce this. Jiangsu Yue Medical.
Yes. So we're seeing within the portfolio, you're seeing companies that within the pharma healthcare space, the companies geared to surgical mass, biotech are the outperformers. Private hospitals are doing well. So healthcare is an area that has a little bit of a defensive, but as well as a offensive characteristic right now.
I would imagine that the government is spending a lot more on procuring supplies and also in terms of people coming into the hospital.
For sure, for healthcare, it's clearly a beneficiary. At the same time, we're seeing a lot of fiscal monetary policy to get the economy going. We know Q1 data is going to be very weak for China, but they're very geared to saying Q2, 3, 4 are going to more than make up for it. They're not changing their 2020 target. So that's where I think investors who are selling today, you could be regretting that very, very quickly.
But guys, do you trust the data out of China? That's always the question.
Well, I think you can trust some of it, but not all of it. The one that was most suspicious to me was the China PMI print we saw earlier. That number really is supposed to be a prediction of whether or not you think things are getting better or worse, right? So it's supposed to be a survey number. You would expect that number to have been 0, right? It's hard for me to imagine that a purchasing manager thinks that this is going to be a great quarter for China. I think we all know that's not going to be the case. Yet we saw a PMI print, I think, of 47.
Unless they're also banking on the fact that the government is going to step in with so much stimulus.
But that doesn't actually, the stimulus doesn't actually generate order flow for the purchasing managers that are supposed to be represented by the PMI. So that one number in particular, I was very skeptical of.
I would add this is obviously China is a key area for certain sector-oriented ETFs and for local markets, but China is also the largest country in most emerging market ETFs. So you think of IEMG or VWO or EEM, China is by far the largest from within. South Korea is or is not, depending upon where it is. So it's important for investors to realize they have exposure in a broader ETF portfolio than they perhaps realize.
And as we close it out, I just put the question to you. We are thinking this is a Q1 event, but what if this starts to really go well into the summer?
Yeah, I mean, so we're seeing it from a U.S. perspective, whether it's going to hit first quarter numbers. But as you mentioned, there are global companies that are here trading in the United States that have exposure to this. So they're planning ahead for the rest of the year. We think that 2020 is going to be a volatile year to begin with, and that was before we saw what was going on in China.
Brendan, what are your thoughts?
I mean, the market's been due for a correction. Mainland China was up 35%. S&P was up 30%. The markets were due for a correction. Who would have thought Corona? Corona is very much affecting the elderly who have pre-existing conditions. And in China, where you have a high rate of smoking and a respiratory element, More people were killed in the last weekend in car crashes than with Corona cumulatively. So I think this is a little bit of just the market is taking a correction. Who would have thought Corona? But I think markets for long-term investors are on sale.